Good morning, everyone. My name is Anne Marie, and today is October the 16th. This is the Moneyball Morning Report for the Benzinga Pro platform. I'm still here in Scotland, but we'll be traveling home on Wednesday, so I will be radio silent for Wednesday. I will be minorly engaged on Thursday, and then Friday I'm out to Scottsdale for an event with IBD. But I should be able to do some videos to at least keep us in the fray of what's going on. So let's first take a look at where I have a little bit of a question mark in terms of what's going on. Oil has bounced really sharply right off the floor. Now, I did think that it would go into this 85 area. It fell like a stone, but it also immediately recovered that 85 zone. And so it tells me there's a lot more buying than I think was supposed to be there because of the following. Sorry about that. And for heaven's sake, so they're not going to let me get Alex Honnold. I wonder if Alex knows his face is being used here. Do you wonder? Let's do this again. All right, so here we are with the dollar. And I apologize for the very light chart. I know some of us don't do well with really bright charts. I'll only be here for a minute. The dollar moved up to 107. It came down to 105.50 and immediately bounced very, very sharply and is still holding up above 106 and some change. Now, I think the dollar's going to sit around in here, but here's my conundrum, as it were. When the dollar goes up, what should happen is things that are priced in dollars go down. But in this case, crude is following the direction of the dollar. Now, I don't know if that's a flight to safety or if something else is going on, because these things should be pulling back under the weight of the dollar. And what I do not see is gold, silver, or the dollar, or oil pulling back. So this is a point of disturbance for me. Not sure why. Now, here's the next thing. We had a bond auction last week. Wednesday did the 20-year. It was atrocious. There were no bids. And so when people don't buy the 20-year bond, they believe that interest rates are going to rise. If interest rates rise, that means their bond goes underwater in terms of net value. And so we have a new bond coming up this Wednesday. We're going to have to watch to see what that is. While we're here looking at gold, we can see the following. It had a dreadful collapse. And of course we could see that because the dollar was on a rocket ship. Now it came to a floor and then it began to bounce. Now it's dipped a little today, but it should still be pulling back as the dollar has continued to move up. Instead, it's moving in the direction of the dollar, which tells me two things. One, it came into a floor where everyone said, holy cow, this has got to be a buy zone. And that engaged short selling that drove gold straight up. And it could be the case that that's also what happened in oil. Now, if prices move up and they're moving up because people are getting out of the market, it's going to collapse under the next line in the sand. And so for oil, that number appears to be somewhere around 88, right? These edges, 88.44, I don't really love to use wicks. I prefer to use candlestick bodies. But this is the thing. And, of course, if we look at how savage this move was down, we know that there's some sort of reflexive motion being moved here. Now, I am bullish oil, but I'm not bullish oil in these formations. I would like to see it collapse a little bit. There's some element of fear-mongering, I'll call it that, that's going on right now. And I believe that oil might rise a little bit more as the ground troops move into Gaza, okay? That's just a reality formation there. I believe it's going to pull back because these savage candlesticks are emotional, and emotional candlesticks will very often retrace themselves. So here's what I'm looking for today. Here we are at the top of the range. We are not above the close. We tried to break above the close of Friday, but so far we're in it. We tried to break below this last group here at 86. We also did not do it. So we're at a crossroad. What are the charts going to do? Well, they're either going to sit still in the overnight range or they're going to break out. Here's my thought. High, higher, higher low, high, higher low, higher high, higher low, higher high. Pullbacks, buy zone. Into resistance. As soon as this starts coming up here, trim part of your position and then get out of the trade as you walk it up. Okay? If you're waiting for a short, I don't know if that's the right thing. That's a really savage emotional candlestick. I'd be careful. So trade in the direction of the trend, which is currently up, and that means your pullbacks are going to be buy zones. Listen, remember I say look at the candle and then 2 candles to the left. The support zone for that second candle to the left is all the way down at 85. So this newer ledge might really take over because that was 3 days in the making. All right, let's take a look at the ES. ES came up off the floor. It had this 43.46 fade that was just awful. And then it closed underneath 43.54, right? That's kind of a big zone. So what's happening now? Notice, current candle, 2 candles to the left. What are they trying to do? They're trying to hold that 43.54 area. So that's going to be the floor you're going to look at today. If it loses 43.54, we're headed down, okay? 2 candles to the left, high, low, lower high, lower low. Is this a lower high? I have no idea. But here's what I do know. If I can hold above this 43.74, 43.75, I'm very likely to head into 43.92, 43.82, and then potentially 43.90, right? The market's not moving in a very fluid way. Notice how many of the candlesticks are retracing each other. And that's really what we want to think about. If we lose this 43.55, I anticipate that we step down into 43.45 and then potentially 43.30 to 43.24. Okay, those are the ledges. We know the areas where I could be wrong, and we know the areas where we could move in that general flow. I think we say sideways, but this motion here, if it breaches, we could get a really big press because remember, when you're short and you're watching the market go up, you just want to run for the escape hatch, and that's going to push prices up really sharply. That's what did it here in these 4 days. All right, so that's it. Let's take a look at the corresponding SPY. Still trying to lift up above from the weekly formation. It's still in this flag pattern, right? I don't think it gets out of this flag pattern until it's above 444. So what are we looking at? Same thing. Notice it comes down 2 days ago, and that is a low that it tries to hold. So 431.30 going to be the floor we look at. It dips below there. It's going to flesh out the bottom here at 429. Old resistance, new support, 430. And then if it loses that, it's got all this congestion edge and this high volume node at 427. If, see how we're moving at the top here? If we breach 433, what that tells us is that 434, 434.50, all the way to 436, 438 could potentially be the flow. And again, the same thing. 2 candles to the left. What we're actually doing is trying to retrace that candlestick motion. That's all that we're looking at today. Now, we don't have a ton of news. Earnings season has started, and so we're going to see a few things. Banks came in pretty good. Last week they started, the big banks. They didn't really have any kind of monster thing happening in terms of charge-offs, write-offs. Everybody was saying, hey, the write-offs are going to increase. No, they haven't said that. And so they're managing their balance sheet very well, and I'm sure that's bringing in credit in terms of saying, hey, we don't have this much going out. But, if you loan money that's never going to pay you back, what's the point of loaning it? And so they're being very proactive about tightening lending standards. That's my conclusion if they go, hey, we don't have any big things set for write-offs. All right, that being said, let's look at the Qs and the NAS. Same thing, same flag pattern. Everybody's looking at this going, man, we're going to have an amazing fourth quarter. Everybody's nervous. Let's just buy on the dip. And that's what's happening. Take a look. We have not broken the low of the prior day. We are now above the close of the prior day. Take a look at the first line in the sand. It literally is right here around this wick. Right here. 15,180. If we get up over 15,180, we're going to climb the wall of worry, and that's going to bring us probably into these candlestick bodies, somewhere around there, 15,269 to 15,317. And maybe if people get very nervous about watching the chart rush up, they might head to 15,466, but I think that that's probably the entire week. Now, what about if we lose the floor? 15,060, that's kind of a big number, right? But what you really want to watch for is how we do at the close of Friday and what we do coming into that number. Because once we lose the close of Friday, after trying to break north, it tells us we didn't have enough buyers at the first press. So if we lose 15,000, what is that number? 15,108, price action is going to start to leak, and it could leak in choppy formations. My thought is, if it loses that 15,108, do not be long. You're going to have downside pressure, and it is what it is. All right? Okay, let's take a look at the Qs. That'll be the last thing. Qs doing the same. Oh, wow. Okay, so this is a little bit different, and it's a little bit different because of the following. This volume profile says that everyone is agreeing on price in here. See how many of them? They're going, all right, if it gets down here, I'm going to buy it. If it gets up here, I'm going to sell it. And so this is the same thing we're seeing. We're seeing the punch up into 372, telling the traders, hey, I think this is the top, 372.50. If it breaks out of there, the market's in another squeeze to cover, because we don't buy, well, we do buy irrationally, but we buy irrationally either not to miss out or because we're short and we have to get out. And both of those do not give us good results. All right, so this is what we're seeing here. Movement to the upside, going to be very, very interesting in terms of flow and motion. If we lose the close of Friday, which is almost near the low, at 364 and 30, the market is going to give way, and we're going to go to the edge. Right here where this congestion is, anywhere from 360 to 357, that would be natural flow. It is what it is. All right? Good luck trading today, and I'll see you on the platforms.